Hello. In this recording, we'll talk about process costing. The material is taken from chapter 6 of the Garrison textbook. First, let's take a look at the learning objectives. We will start out with a description of process costing and the cost flows that occur under process costing. Then we shall define and calculate equivalent units under the weighted average and the FIFO method. We will then take a look at the calculation of the cost per equivalent unit under the weighted average and the FIFO method. We will describe a production report under the two methods, as well as prepare a production report. And then finally, we will calculate the cost of lost units, also referred to as shrinkage. So starting with process costing. Process costing is commonly used where a company produces the same type of product, i.e. homogeneous products, on a continuous basis. And this requires that all units of products are identical. The costs are accumulated by department for each accounting period, and that allows us to prepare a department production report. Unit costs are calculated by department based on the department production report. To distinguish process costing from job order costing, which we learned about in chapter 5, we take a look at the following aspects. Job order costing involves many different jobs that are worked on during each period, and each job has different production requirements. In contrast, under process costing, we have a single product produced either on a continuing basis or in long production runs, and all the units of that product are identical. Job order costing requires that costs be accumulated by each individual job, regardless of when the work was done. In contrast, process costing, we accumulate the cost by department, and we do so for each accounting period. Now, that accounting period could be monthly or even longer. Under job order costing, the key document that helps control the accumulation of jobs, of costs per job, is called the job cost sheet. In contrast, for process costing, it's the department production report that is the key document, which shows the accumulation and disposition of costs by that department. And then finally, the unit costs are calculated for each job on the job cost sheet, whereas under process costing, the unit costs are calculated for each department based on the department production report. Next, let's take a look at the process costing flows of costs. Basically, the three product costs involved are raw materials, salaries and wages payable, and manufacturing overhead. As these costs are incurred, they get accumulated in each of the process departments. So in this diagram, there are two processing departments, Department A and Department B. The raw materials used for Department A are accumulated in the production report for Department A. That for Department B get accumulated in Department B. So on for salaries and the manufacturing overhead. Now there is sequential production. So as the work is completed in Department A, the costs from Department A are transferred out into Department B. So as far as Department B is concerned, not only will it have costs that are transferred in from Department A, but Department B will on its own consume raw materials, labor, and manufacturing overhead. Finally, when the production is completed, the goods are shipped out from Department B into the finished goods warehouse, from where they are sold and recorded as cost of goods sold expense. Next up, let's take a look at what a production report is about. It's basically a summary of all the activity in a department's work in process account during a given period. And it contains three parts. The first is a schedule of the physical quantity of units and a calculation of equivalent units. Next, we calculate total and per unit costs for those equivalent units. And then finally, we perform a reconciliation of the cost of goods sold and the goods in ending inventory. First, let's take a look at what equivalent units are all about. The definition is that equivalent units connote the number of completed units that could be produced with the quantity of each input. And for us in process costing, the inputs are categorized as the cost of materials and conversion costs. Recall, conversion costs include costs relating to direct labor and manufacturing overhead. Since process costing is applicable where the production is continuous and it's typically fast-paced, we do not distinguish or separately track direct labor costs and the manufacturing overhead. Instead, we combine them into conversion costs. We also look at the incomplete units of work in process. So equivalent units is simply the number of partially completed units multiplied by the percentage completion. Now, of course, keep in mind if percentage completion is 100%, then by definition, those are complete units. So for example, if we have 100 units in work in process, which are 60% complete, we would say that those 100 units are equivalent, not equal, but equivalent, having the same value to 60 completed units. Next, let's take a look at the costs that might be included in a production report. We can have transferred in costs, which are essentially costs that are brought forward from a previous process. These costs get added to the current period costs under weighted average, but they are not added to current period costs under first in, first out. However, regardless, these costs will be included in the cost of good units that get shipped out. For the process, for the current period, there will be direct material costs and conversion costs, which would include labor and overhead. Spoilage, rework, and scrap. So when companies perform quality testing, the inputs, the units that do not pass the quality inspection because they don't meet the quality criteria or the specifications laid out by the customer are called spoilage. Scrap refers to residual material from manufacturing. Now, sometimes scrap may be reused in production, sometimes that's not possible. If spoiled units cannot be repurposed or refurbished through rework, then they also get sold as scrap. Now, with regards to units that are considered spoiled, a certain amount may be considered normal. So normal spoilage is a result of predictable rates of failure in the production process. And by definition, normal spoilage is not controllable or avoidable. The cost of normal spoilage is included in the cost of goods manufactured. Any excess or unexpected spoilage, which could have been avoided, is considered abnormal spoilage, and abnormal spoilage gets written off as period costs in the form of a loss. How do we determine spoilage? Most companies will conduct quality inspection. Now, this could be done at various stages of completion. Usually, It's done when the product is 100% completed. Normal spoilage is expressed as a percentage of units which satisfactorily pass inspection, and abnormal spoilage is the excess of the actual number of spoiled units over and above normal spoilage. Now let's take a look at how we would perform process costing calculations under the weighted average method. Step one, we calculate equivalent units. So for this, we must first calculate the total number of units to be accounted for. And that's the units in beginning work in process inventory plus the number of units on which we began working during the period. Next, we account for these units. And these units that we had to account for can be accounted for either in terms of the good units that we managed to complete and transfer out, units that are still in inventory, so part of ending work in process inventory, and if there's any difference remaining, then that difference is considered spoilage. Spoilage itself can be further broken down into normal and abnormal. Next up, for each category that we identified here, the number of good units completed, the ending work in process, normal spoilage, abnormal spoilage, we determine the percentage of completion, and that is used to calculate equivalent units. Equivalent units is the number of physical units multiplied by the percentage of completion. By way of an example, we have this company here, Handy Products, manufactures a product that goes through 3 processing departments. Information relating to activity in the first department in the month of October is given to us. The beginning work in process comprised of 25,000 units, for which materials were at a 90% stage of completion and conversion costs were at a 60% stage of completion. The ending work in process consisted of 15,000 physical units, which were 100% complete as far as materials go, 50% complete as far as conversion. The department started 195,000 units into production and transferred 205,000 completed units to the next department. Assuming that the company uses the weighted average method of accounting for units and costs, we are asked to calculate the equivalent units of production for the first department for the month of October. So basically, we had to account for a total of 25,000 units in beginning inventory and 195,000 units that were started in the month of October. So 195,000 plus 25,000, that works out to 220,000 units in total. Now, how do we account for these 220,000 units? First off, 205,000 units were completed and shipped out, and we have 15,000 units remaining in ending work in process. So 205,000 completed and shipped out, plus 15,000 in ending work in process equals 220,000 units that we needed to account for. So once we have satisfied ourselves that we have accounted for the physical units, next up we look at the equivalent units. For the 205,000 units that we have completed and shipped out to the next department, they must by definition be 100% complete for materials as well as conversion costs. 205,000 units completed and shipped out must be 100% complete for materials, so equivalent to 205,000 materials for materials as well as conversion costs. Our ending work in process, though, is only 50% complete for conversion costs. It is 100% complete for materials. So 15,000 physical units multiplied by 100%, you get 15,000 equivalent units for ending WIP, and 50% of 15,000, 7,500 units is the number of equivalent units with regards to conversion costs in ending work in process. If we were to sum up, for materials, we have 220,000 equivalent units. For conversion costs, we have 212,500 equivalent units. Step number 2 is to calculate the cost for each equivalent unit. Here, we first determine the cost that we must account for. And these costs would include the costs in the beginning work in process plus the costs incurred during the current period. We do this for each cost category. That means transferred in costs, direct materials, and conversion costs. We then divide these costs by the total equivalent units for each category, which we had computed in step 1. As an example, this company uses the weighted average method in its process costing system. Data for the assembly department for the month of May is given below. So notice that they have provided us with information for materials, labor, and overhead. Now, labor and overhead are usually added together and referred to as conversion costs. For this particular question, though, we've been asked to calculate the cost for each equivalent unit for materials, for labor, and for overhead, as well as in total. So how do we go about this? We must first determine the cost that we have to account for. We had in beginning work in process, $28,000 worth of materials, $22,000 worth of labor, $117,500 worth of overhead. During the month, we added $52,000 of costs for materials, $18,500 of costs for labor, and $63,600 of costs for overhead. So that, if we were to add together the costs of materials in the beginning work in process and the costs incurred in the month of May, gives us a total of $80,000 for material, and similarly $40,500 for labor, $181,100 for overhead. The equivalent units of production for the month of May have been provided to us: 1,500 for materials, 800 for labor, and 1,200 for overhead. Divide the total cost to account for by the number of equivalent units, and that gives us 80,000 divided by 1,500. $53.33 is the cost per equivalent unit for materials. For labor, 40,500 divided by 800 equivalent units is $50.63. And likewise, overhead, 181,100 divided by 1,200 equivalent units, that gives us $150.92. Step 3 is the assignment of costs. We assign these costs to good units completed and transferred out. Now, if there was spoilage, the cost of normal spoilage will be added to the good units completed and transferred. The ending work in process, we assign costs similarly to that. And then thirdly, abnormal spoilage, if there is any, is recorded as a loss. And in order to assign these costs, what we do is multiply the cost for each equivalent unit, calculated in step 2 above, by the number of equivalent units for each cost item, which we calculated in step 1. Here's an example. The most recent period's activity in the prep department in a company that uses process costing is provided below. For materials, they had 2,000 equivalent units in ending work in process, 800 with regards to conversion. The cost per equivalent unit is given. A total of 20,100 units were completed and transferred to the next processing department during the period. There's no mention about spoilage, so we can assume there was none. We've been asked to calculate the cost of ending work in process inventory for materials, conversion, and in total. So that calculation will involve multiplying the equivalent units. So equivalent units for materials is 2,000. and the cost per equivalent unit is $13.86. So in here, I have not shown you the uh, the cost of ending work in process for materials separately, but you can calculate that by multiplying 2,000 equivalent units for materials by the $13.86. And likewise for conversion costs, 800 equivalent units multiplied by $4.43 will give you the cost for conversion. And the total will be the sum of the materials and the conversion cost that we calculated, and that works out to 31,264. For the units that we completed and transferred out, likewise 20,100 completed units multiplied by $13.86 for the materials, and the same number of units, 20,100 times $4.43 for labor. That amount works out to 367,620. As a last step, we record the costs incurred. So costs that are incurred in the current period, we debit work in process and credit raw materials inventory for the amount of direct materials used, and then credit various accounts for conversion costs. Examples might be wages payable for the labor cost, and then there can be any number of other accounts involved with regards to the manufacturing overhead. You could credit accumulated depreciation for the depreciation on plant equipment, credit accounts payable for any kind of other costs that had to be paid for in cash, etc., etc. At the end of the period, the cost of good units transferred out is recorded by debiting the work in process for the next process, debiting abnormal spoilage loss in case there was any, and crediting work in process for the current process. As an example, we have here Tasty Bakery uses a process costing system for its popular rye bread. It's got two processing departments, mixing and baking. And we've been given T accounts for work in process in the mixing department and then the work in process for the baking department. Notice that the T account shows the beginning balance and then the cost added, direct materials, direct labor, and overhead, and then the cost transferred out. The ending balance has not been provided, but it should be capable of being calculated. All we need to do is add up the beginning work in process, direct materials, direct labor, and the overhead. So over here we can see that's 65,000. And from that, if we subtract the cost of the units that were transferred out, $60,000, the remaining 5,000 will be the ending work in process. And similarly, the work in process for the baking department is given. We've been asked to prepare journal entries showing the flow of costs through the two processing departments in the month of April. Keep in mind that the costs that are transferred out from the mixing department will go into the baking department. All right, so first looking at the work in process in the mixing department. For the mixing department, we added direct materials, 25,000, direct labor, 15,000, and overhead was incurred for $20,000. So the journal entry would be debit the work in process for the mixing department, credit raw materials inventory for the raw materials cost, credit the wages payable for the cost of labor, and credit manufacturing overhead for the overhead incurred. And then we transferred out $60,000 worth into the next department, which is the baking department. So credit the work in process for the mixing department and debit the work in process for the baking department. Looking at the costs in the baking department, we've already recorded the $60,000 transferred in from the mixing department. So all that's left is to record the cost of labor and overhead. And we do that by debiting work in process in the baking department, credit wages payable, and manufacturing overhead. And since there were only two processes, it stands to reason that the cost being transferred out of the baking department is basically being transferred to finished goods. So debit finished goods and credit work in process for the baking department. Looking next at the first in, first out method, there are some assumptions that we make under FIFO for process costing. First up is that all units in beginning work in process, we assume, were completed and transferred out during the current period. And so if there are any units found to be spoiled, that spoilage relates only to the current period's production. When we calculate equivalent units, they must relate to the work done in the current period only. So that means we must exclude any work already done for the beginning work in process and focus only on the work required to complete the beginning work in process inventory and the work done on units that were started in the current period. And it stands to reason, therefore, that when we calculate cost per equivalent unit, it must be calculated only for costs incurred in the current period. Now, we still will account for all costs when we record the journal entries, but the calculation of the cost per equivalent unit is limited to the cost incurred in the current period divided by the equivalent units for the current period. So it stands to reason that FIFO, the calculation will be slightly different than for weighted average. We first calculate the total number of units to account for, which, similar to weighted average, was the number of units in beginning WIP plus the units started during the period. Next, we account for those units, and those units will, in terms of physical units, will include good units completed and transferred out, and that would include beginning work in process, units started and completed during the current period. Ending work in process is what remains incomplete. And if there's any difference between the number of units to account for and the subtotal so far, the difference is spoilage, which could in part be normal spoilage, and any excess is abnormal spoilage. For each category that we identified above, we determine the percentage of completion. Our calculation of equivalent units for the current period is the number of physical units multiplied by the percentage of completion, but keep in mind that we only consider the work performed during the current period. Let's take a look at an example. We have quality company produces wine bottles for vintners in a process that starts in the melt and mold department. Data concerning the department's operation for the most recent period appear below. We've been given information about beginning work in process, units started into production in the current month, units completed and transferred out, and the ending work in process. The company uses the FIFO method, first in, first out, in its process costing system. We've been asked to calculate the equivalent units of production for the period for the melt and mold department. So here we must focus on the work done. Since the beginning work in process was already 75% complete with respect to materials, in the current period, we must have completed the remaining 25%. For conversion costs, the beginning work in process was 25% completed, so we must have done the remaining 75% of the work. So our number of units completed and transferred out, 42,500, includes 400 units from beginning work in process, and the remainder units that we started working on and completed in the current month. So to get that number, the number of units that we started and completed in the current month, subtract the number of units that we completed and transferred out, From this number, subtract out the beginning work in process. Because our assumption is that all units of beginning work in process were completed and shipped out. So that's 42,100 units, and these must be 100% completed. So in terms of total number of units that we had to account for, it was 400 units in beginning WIP plus 42,600 units that we started into production in the current month. So that's 43,000 units. Out of that, 42,500 were shipped out, which means we are left with 500 units in ending work in process. Again, there's no spoilage so far. Now, these ending work in process units, 500 physical units, are 80% complete with regards to materials. So work done in the current month is 80% for materials and 30% for conversion costs. So keeping this in mind, we then are able to calculate the equivalent units thus. To complete our beginning work in process, which were 400 physical units, we had to add 25% worth of materials. That's equivalent to 100 completed units. And we had to add 75% of conversion costs. So 400 actual units times 75%, that's equivalent to 300 completed units. For the 42,100 units that we started and completed in the current period, we must have added 42,100 units worth of materials and the same worth of conversion costs. The ending work in process is 500 units, which is 80% complete for materials and 30% for conversion. Equivalent units for materials is 500 times 80%, that's 400 units. And for conversion costs, 500 times 30%, 150. Adding up vertically, we get equivalent units for materials is 42,600, and that for conversion is 42,500. So just a little different from the weighted average calculation. Step 2 is to calculate the cost for each equivalent unit. We must determine costs that are included in the beginning work in process as well as costs that were incurred in the current period. We need to do this for each cost category, which is transferred in costs, direct materials, and conversion costs. However, when we calculate the cost per equivalent unit, we focus on the cost for the current period only. So you want to divide the costs that were incurred in the current period only by the total equivalent units for each category that we calculated. And those equivalent units also relate to the current period only. By way of an example, we have this company for which we've been provided costs added in the month of May for materials, labor, and overhead. And we've been given the equivalent units of production. We're asked to calculate the cost per equivalent unit. To do that, we simply divide the costs that were added in the month of May by the number of equivalent units of production. So that is done by dividing the costs by the equivalent units there. The cost per equivalent unit for the month of May for materials is worked out to $5.16. That for labor is $3.78. And that for overhead is $18.39. I'm not a huge fan of calculating the total cost per equivalent unit because we typically have different stages of completion for a conversion cost. So we rarely ever use the total cost per equivalent unit. I would suggest only calculate the cost per equivalent unit for the respective cost columns. Don't do it for total. Then we assign these costs. The costs are assigned to good units completed and transferred. Now here we have to be careful because there were already certain costs in the beginning work in process, and then we added more costs during the current period to bring the beginning work in process to completion. And then finally, we have costs of good units that we started and completed in the current period. If there was any normal spoilage, that too would have been added to the cost of good units completed in. Ending work in process is tracked separately, and if there was any abnormal spoilage, it gets recorded as a current period loss. The calculation itself is done by multiplying the cost per equivalent unit by the number of equivalent units for each cost item. As an example, we're given data about the mixing department, and we've been provided some dollar amounts for the cost of work in process at the beginning of the period, the equivalent units of production in the ending work in process, equivalent units of production needed to complete the beginning work in process inventory, and the cost for each equivalent unit for the period. A total of 8,000 units were completed and transferred out to the next processing department, and they must have included the beginning work in process units of 1,000. So units that we started and completed in the current period must be 7,000. And we can confirm that because the beginning work in process was 1,000 physical units. We started working on 8,000 units. If we have 2,000 units still in ending work in process, then out of 9,000, if 2,000 is taken out, the units that we started and completed must be 7,000. Okay, now next we take a look at the costs. So our ending work in process has 400 equivalent units for materials, 700 equivalent units for conversion. Multiply the equivalent units by the cost per equivalent unit, and ending WIP is 3,780. For the units that we completed and transferred out, we already had certain costs included in the beginning work in process. That's $3,080. We further incurred costs to complete the beginning work in process. So multiply those costs by the cost per equivalent unit, and then the number of units that we started and completed, 7,000, those by definition have to be 100% complete with regards to both materials and conversion costs. The sum total of these costs is $45,650. And lastly, just as we did for the weighted average, we record the costs. Costs incurred in the current period, debit work in process for the current process, credit raw materials inventory, and credit various accounts for the conversion costs. If we have costs of good units, well, we do have costs for good units transferred out. Those are recorded by debiting the work in process for the next process. Or if we are dealing with the last process, then we would debit finished goods inventory. If there was any abnormal spoilage, you're going to debit abnormal spoilage loss and credit work in process for the current process. So this concludes my brief lecture on process costing. We will be doing more examples in class. I look forward to that discussion. Thank you for watching.